Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. I want to start today by thanking everybody who'd clicked the like button. I said yesterday that if you want to give me some feedback and to inspire me to do more videos, the best way to do it is if I see more likes here and more people are subscribing, then that gives me the feedback that you're liking what I'm doing. I just want to give you a shout out. Also, some of the comments I get here in the comment section, to be perfectly honest with you, I'm totally overwhelmed by some of the wonderful love, affection and kindness you show to me. So I really don't know what to say except thank you very much indeed for that positive energy that you give me. On to today's video. It's going to be hopefully a quick one. I mean, yesterday I thought I was going to do a 5-minute video, went into about 15 or 16 minutes because there's just so much going on in the charts that I feel as though I need to add more and more value to my subscribers. So let's get on with it. But before I begin, the usual disclaimer, please remember everything in my videos are for educational purposes only. Nothing should be taken as financial advice. I don't have a crystal ball. I'm not a financial advisor. All I would say is please do your wider research before making any investment decisions. It's your money, so please make sure you make good decisions with it. Before I go into the shorter term analysis, I want to show you this chart which tells me that we are very, very close to the bottom. And the reason why I say that is that this is a chart I've been showing you for many months now as this was developing. This is on the weekly chart. What we had was this bump and run pattern here with this lead-in phase, the bump phase and the run phase here, which normally, as in classical charting, it comes back to retest this trend line here before we go off to the races. Obviously we went to the races, but we got rejected at the $69,000 mark. And since then we've been in basically a free fall, which I've been showing you over the last many videos now. We've established these key critical levels, which I've been showing you, especially for those who are swing trading. This is at 45.5. The green line is at 42,300 to encapsulate this big support that we got here, as well as all this support around here. And then we've got this red line, which is a 40,000, which is the key support line, which has been established over the last year or so. And these are extremely profitable for swing trading because they're key support levels. Now, what this trend line is doing is telling you that as we're coming down and taking our time to gravitate towards this level here, this very strong resistant point at around about the $28,000-$30,000 mark, we haven't quite hit that yet. Just by looking at this visually, it looks inevitable that we are going to be touching this trend line somewhere along the line. So currently, this trend line is at around about 31.7. Next week, when we move the cursor to the right, this goes down to 30,900. Depending on when and where we hit this white line will determine the price at which we bottom out. And the confluence is obviously around here, at around about the $30,000 mark here. So let's wait and see, but certainly people who are saying that this is going to go much lower, obviously the possibility is there, but I would suggest that with this level of support and this trend line here, which has provided resistance and support with all that's going on, it seems highly improbable that we'll go down too far. And let me show you something that hopefully will convince you that there is a very high degree of probability that we're going to get a big bounce at these levels here. This is the Bollinger Bands on the weekly chart. So this is really relevant and important. What you see with these Bollinger Bands are something very exciting in many ways, because what I use them for is basically looking at whether a price is oversold or overbought. So here, when we're pushing the Bollinger Bands up here, look, you can see that the price is really overbought, but the demand and the momentum is so strong that it doesn't come back into the Bollinger Bands here until this happens. When the price moves into the Bollinger Bands and away from these, you can see that the momentum is shifting here. And normally we go from the top of the bands to the bottom of the bands, back to the top of the bands, back to the bottom of the bands. And this is where we are. Yes, the bands can keep on going down and the price can keep on hitting them down. Yes, that is obviously a possibility. And that will obviously depend on the momentum of this here. But as we're seeing with this indecision candle on the weekly chart, we've got a loss of momentum here because this candle is telling us that the buyers are moving in and preventing any further decline at this point, at this time. That doesn't mean that we can't get a red candle down here, of course, and that's what I'm expecting actually now. So what this is really saying is that we're really quite oversold in this territory. Yes, there could be a little bit more to go here, but compared to up here, this is very much oversold territory. One indicator I haven't shown you for many, many months now, and I use this very regularly. In fact, I use this every day. Moving on to the daily chart, I mentioned yesterday this 8 EMA, the 8 exponential moving average. As you can see, we've been basically being rejected at these points on the 8 EMA repeatedly, and these were at the 21 and the 34 EMA, which are the Fibonacci numbers. And we have been continually doing that along the way. And we were coming up to this level yesterday. And I said that we may well get rejected at this point here on the 8 EMA. And that's exactly what we've done. We went above it and then closed well below it. And the last time we did that was on the 20th of January here. So we pierced above the green line, the 8 EMA, and then got rejected. And then this followed afterwards. So we just got rejected here. And it looks like we're going to have a similar type of fall here. So we'll just have to wait and see, but this is sometimes the result when they get rejected at a key like the 8 EMA. Currently, the 8 EMA is at around about 37.4, so it may well be we get rejected again at the 37.4 level if it does come up to those price levels. Now, I just want to focus on the daily chart with these candlestick patterns, which I've been explaining to you over the last couple of videos now. And that is that we were coming down in this downtrend, a very strong downtrend, and basically this downtrend was arrested in its decline by this candle here. So what you found here was a series of red candles followed by a green candle at the bottom of this trend means a loss of momentum. So the momentum of the bears here was basically stopped in its tracks by this candle here. And what we got was that this candle was an inside bar candle whereby the following candle, this green candle here, the price action at the top and the bottom was contained within the top and bottom of the preceding candle, the inside bar candle here, which means that the sellers were not able to push it below this, and hence the momentum was lost and the bulls were able to push the price from these levels down here all the way to closing up at this point here. So that was your first sign that this downtrend was coming to an end. So basically we got a series of inside and outside bar candles here, which all signify different things. So having closed above this level here, showing strong signs that this downward decline had come to an end and the loss of momentum of the bears was being taken over by the bulls here. So a reversal was being seen quite categorically here. And then this particular candle, while the bears tried very hard to push the price all the way down here below this level, but it was pushed back, as I mentioned in the last couple of videos, very, very strongly. Now, so this bar told you that a reversal or a relief rally is on its way. And it duly arrived in this price action that we got over the last couple of days. So this was really a good place to be swing trading. And if you want to know the levels of where the price could go from here to there, as I've shown you with the Fibonacci retracement, if you take it from the top here to the bottom of this candle here, a good place to take profits would have been on the 61.8 level here. So the swing traders were basically taking profits in this region here, having got in at this level down here. Now what we've got yesterday is virtually the reverse of this candle over here. So what we've got really is a loss of the upward momentum being pushed down by the bears to these levels here. And that is a sign that the momentum to go up has now faltered and we're now turning back around this way. And if we go on the 4-hourly chart, as I mentioned yesterday, with the development of the various candle patterns, there was so much action going on around here. As I mentioned yesterday, the 4-hour candle closes, especially this one here, the gravestone doji, which is a reversal pattern. However, I mentioned yesterday that if you mark up the top of the wick and the bottom of the wick, a reversal is usually confirmed once we break above or below to know which direction the market is going. And I said quite clearly yesterday that if we break, have a close above this top wick line here, which is what happened with this candle following it. So basically it increased the momentum to go much higher. And this is exactly what it did. It went about another $1,000 mark from 3.7 all the way to about 3.8, 3.9. However, after this green candle, what we got was a spinning top candle following it, which again gives more information as to what's actually going on with the buyers and the sellers. There's a real fight going on here between the bears and the bulls, and the spinning top is an indecision candle. But in my experience, when it comes at the top of a trend, it generally marks with a good degree of probability that a reversal is about to take place here. So yesterday, for those of you who were following me on the Twitter, because there was so much going on, I had to keep on making comments about this. So I made the comments here. Please take note. We have a 4-hour spinning top candle at the 50% Fibonacci level. This appears to me that we are topping out at this level and less probability of making 40k. The dead cat bounce occurs at 50% fib levels, and swing traders are taking profits here. And the second leg of the W pattern down here is on the way. So I was saying that when we just hit this spinning top candle here. And then after that, I made another comment that the current 4-hour candle closes in 25 minutes. That was this red, this is this blue candle here. And as you can see, the big wick at the top, big wicks at the bottom, and the war is going on between the bulls and the bears, both landing strong punches without a knockout blow. So we had to just wait for confirmation around these levels. And I was talking about a good probability to reverse because of what was happening here. And what followed because of this, as you can see, this candle with a long wick at the top was telling us that the momentum had shifted from the upside to the downside here. And the final comment I made yesterday was that the 4-hour candle closed with a strong rejection of higher prices at the 50% fib levels. And I said basically that the 61.8 from the current levels takes Bitcoin down to 35k, and the price came down to 35,500. So in between my videos, if I see something developing and I've got the time, then I'll post some more comments on there and give you my perspective for whatever it's worth to you. All I'm doing is giving you my perspective of what is happening with the various candle formations, with the various patterns that are developing, the moving averages, etc., etc. And if you find that valuable, then go to my Twitter page. I've left the link in the description box below. So currently, we've come back down to the 35.5. My target price was at the 61.8 level here. If you take it from this bottom to this top here. So the 61.8 is basically at 35,200. So this is where I expected the price to come. So this reversal here with this downtrend, we're just having a little bit of a relief rally here, but I'm expecting the price to come back down, at least to touch this. But if we break this 61.8, then with a higher degree of probability, we're going to come and test this level here at the 32,900 again. So this is the 4-hour candle here. It's showing signs of indecision again, with a wick at the top and a wick at the bottom. So another spinning top possibly developing. It's now 11 o'clock. This closes at 12 o'clock UK time in about an hour's time. We'll just have to wait and see. If I see some developments, I might post some more comments in the Twitter later on today. So for those of you who did follow me on the Twitter yesterday, I hope you found that of value. And if you did, then please leave your comments in the comments below. Okay, so that's basically the review from yesterday and what's happening today. But the main thing to always remember is that we've got these levels here at 40k and 30k. And in between, there will be all this sideways range that's going to be going on. Okay, so we'll leave it there. I hope you found value in that. And if you did, then please do remember to like and subscribe and give me the feedback so that I can do these more often. And if you want to leave any comments, questions or suggestions, then please leave them in the comments below. And if you want to join me on the Twitter, then click on the link in the description box. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.